ever wondered how to use the RSI indicator effectively on TradingView to make a profit in the Indian stock market? Well, today, we're going to unravel the mysteries of the Relative Strength Index, or RSI, a vital tool in the trader's toolkit. RSI is a momentum oscillator that measures the speed and change of price movements. In simple terms, it helps traders identify when a security is overbought or oversold and could potentially reverse its direction. Why is it so important, you ask? Well, understanding RSI can give traders an edge in the market by providing potential buy and sell signals. It's like having a secret compass guiding you through the turbulent seas of the stock market. But don't just take our word for it. Dive into the world of RSI with us and see for yourself how it can help you navigate the choppy waters of trading. Understanding RSI can be your first step towards making informed trading decisions. Now, let's learn how to set up the RSI indicator on TradingView. To begin, navigate your way to the TradingView website. Once you've arrived, your first step is to open a chart. This could be any chart of your preference, perhaps one related to the Indian stock market, Nifty50 or BankNifty. Once your chart is up and humming, locate and click on the Indicators button. This will open a search bar for you to type in RSI. As you begin typing, a list of indicators will pop up. From this list, you'll want to find and click on Relative Strength Index. This will add the RSI indicator to your chart. And voila! Just like that, you have successfully added the RSI indicator to your chart. You're now one step closer to understanding the nuances of the market and making informed trading decisions. You have now successfully set up the RSI indicator on your TradingView chart. But how do you interpret what the RSI is saying? That's a question that stumps many new traders. Let's demystify it. The RSI, or Relative Strength Index, is read by looking at two primary levels, 70 and 30. These are not arbitrary numbers, but are significant markers in understanding market trends. When the RSI is at 70 or above, it suggests that a security may be overbought. In simpler terms, it's becoming overvalued. Now, what does that mean? Essentially, it's a hint that the market could be nearing a trend reversal or a corrective pullback in price. This is because the market is like a pendulum, always seeking balance. When it swings too far in one direction, it tends to swing back. On the other hand, when the RSI drops to 30 or below, it signifies an oversold condition. This could indicate a market bottom, suggesting that it might be a good time to buy. Remember, an RSI reading of 70 or above can indicate a market top, while a reading of 30 or below can signal a market bottom. How does one use the RSI for making trading decisions? Well, at its core, the Relative Strength Index is a momentum oscillator that measures the speed and change of price movements. It's commonly used by traders to predict potential reversals in the market. One key concept to understand is divergence. This is when the price of a stock is moving in one direction, but the RSI is moving in the opposite direction. When you spot a divergence, it could be a sign that the current trend is about to reverse. In addition to predicting reversals, the RSI can also help identify the general trend of a stock. If the RSI is consistently above 50, it's typically an indication that the stock is in an upward trend. Conversely, if it's consistently below 50, it might suggest a downward trend. So the RSI is not just an indicator, it's a valuable tool for spotting potential reversals and identifying trends. Let's wrap up what we have learned today. We started our journey by understanding the Relative Strength Index, or RSI, a crucial momentum oscillator that measures the speed and change of price movements. It's not just about knowing what it is, but also about how to set it up on TradingView. We delved into the process, ensuring that you're now able to add this powerful tool to your analytical dashboard. Understanding the RSI is only half the battle, though. We also discussed how to read it, deciphering what those numbers between 0 and 100 truly mean. We explored how to use this understanding to make informed trading decisions, turning the RSI from a simple line on a graph to a profitable trading strategy. We've covered a lot of ground today, but remember, practice makes perfect. So apply what you've learned, test it out, and refine your strategy. With the RSI as part of your trading toolkit, you're now better equipped to navigate the ebbs and flows of the Indian stock market. Happy trading!